Hello students, today we will understand in continuation of the national income chapter how to calculate GDP. Basically we will understand what is the nominal GDP, real GDP and GDP deflator. So in slide number 1, first you will identify what are the reason to increment in the GDP. There is only two reasons in the increment of GDP. First, whether there is change in prices or there is increase in the prices of goods and services. Another reason is this, there is increment in the quantity of the goods and services. So these are the two basic reasons by which GDP is increasing in the national income. So we need to understand the method of calculation when the prices are rising. What are these methods? Basically, with the very simple economy, we will understand what are these methods, how to make calculations, how to identify the change in the GDP, what is the nominal GDP, what is the real GDP and what is the GDP deflator. I have taken an example, very simple example of the economy. In the economy, for example, we are producing three products. As an example, I have taken hammer, hand blender, washing powder. After that, I have prepared a table which is related to these three products. What this table representing? Basically, in this table, you can see 2018, 2019 and 2020, three respective years I have taken. In these respective years, I have taken the three different products which will be calculated for the nominal GDP and real GDP. In this table, the products, quantity and price in respect of different years to make the calculations. So, first we will calculate nominal GDP 2018. To calculate the nominal GDP, we have to make a valued all products and services at the price of current. So, current year prices are the base for the nominal GDP calculations. I have taken over here nominal GDP 2018 is equal to Q 2018 multiplied by P 2018. Q representing the quantity of that respective year, P representing the price of that respective year. So, nominal GDP is calculating of 2018 is $6,150. Now, the question is this, how this $6,150 rupees 50, how it has already been calculated. Now, please come to the back for the table which we have represented before. The first product in 2018, I have taken washing powder. The quantity of that washing powder, that was 90 units, 90 packets you can say, each packet having their price of 50. Now you need to come the next slide where we have made the calculation of washing powder with respect of their price, that is 90 multiplied by 50, and again another product we need to make a calculate, that is hand blender with the quantity of 75 unit and price of each unit is 2 rupees. So, in the next slide as a hand blender we have multiplied with the quantity of hand blender with the multiply price of hand blender. So, that is why 75 multiplied by 2. Again the next quantity or product we have taken, that is hammer. The quantity of hammer we have taken 50 in numbers and the price of each hammer is rupee 30. So, now come to the next slide where you can see the 50 is the quantity is multiplied by 30 is the price of hammer. So, when we are doing the make calculations or summation of all products which is going to be manufactured in the current year in the nation or any country, that will be nominal GDP we have calculated, and this is $6,150. Now, come to the next slide, this is nominal GDP 2018. As we have in the previous slide calculated the nominal GDP of 2018 and respect of every year we have to be calculate accordingly. So, nominal GDP 2019, again we are multiplying with the quantity of 2019 multiplied by price of 2019. So, price of washing powder in 2019, now we can go with the last slide of tabular where we have made a table. There we can see in 2019 the price of washing powder is 60. When you can compare, when you can make comparison between 2018 and 19, in 2018 the price of washing powder was 80, 50, and in 2019 the washing powder prices is 60. So, now there is a change in the price of washing powder in respect of different year. So, accordingly washing powder, hand blender, hammer, they have changed in their prices in the 2019. So, now come to the next slide. This is nominal GDP 2019, where we have made the calculation of 100 multiplied by 60, it is for washing powder, plus 100 multiplied by 2 for the hand blender, 50 multiplied by 2, it is a hammer. So, 100 is a quantity, 60 is a price for washing powder. Again 100 is a quantity and 2 is a price for hand blender. Again 50 is a price for hammer and 25, 50 is a quantity for hammer and 25 is a price for hammer. So, summation of all these products which is available in the market in the current year calculated as $7,450 as a nominal GDP 2019. Next, we have to make a calculation of nominal GDP 2020. As the previous calculations we have made for 2018, 2019 in respect of 2020, we will make the same calculations, but now there is a variation in the prices as we are saying the change in the quantity as well as change in the prices. Now, again we are going to make a calculations with respect of table. So, please see the table 2020. 2020 table where the washing powder quantity is in demand, that is 100 and prices is 65, whereas the hand blender is going to be produced with a quantity of 120 with the price of 2.25 per piece. Hammer is going to be produced with a quantity of 65 and the price is going to be charged in the market, that is 25. So, in 2020 we have the nominal GDP 2020, that is $8,395. So, now you can imagine, even though you can analyze the change in the nominal GDP from 2018, 19 and 20. So, there is a little bit increment in respect of different years in the nominal GDP. So, that was a nominal GDP concept. Then we will understand the real GDP. What is real GDP? How it is different from the nominal GDP? We will make the calculation of real GDP, which is basically is going to be calculated on the basis of base year. What is the base year? First we need to understand. The year in which very low fluctuations has been observed in the market in the prices of the goods and services has been taken by the government of India as a base year to make calculations of GDP. So, in 2018, if we are taking the example, we are going to calculate the real GDP, how we will take a base year to calculate the real GDP. Basically, according to the Indian government, they have taken 2011 as a base year to calculate the real GDP. The reason behind it to calculate the real GDP is that we need to be measure the growth and inflation check in the changes of the prices in the country, in the goods and services. That is why we require to calculate the real GDP. So, this means that all values are in what we call 2018 dollars or constant dollars, because the values is constant that time. That is why it is calculated as a real GDP. By using price from the base year, now we can eliminate the impact of price inflations and we can identify what is the growth rate of GDP in the market. Now, we are making the calculation of real GDP in respect of different years. Real GDP in 2018, 2019 and 2020. Real GDP 2018 is equal to quantity multiplied by price of 2018. Now, quantity in the 2018 for the real GDP, that was the same which we have calculated in the nominal GDP. 90 packs were in the manufacturing, 50 was the price of each and every packet were available in the market, as well as for the hand blender 75 units has already been manufactured with the price of 2 rupees each pack. Hammers also having the quantity of 50 packs per pack is having a price of 30. By making these calculations, now we can presume what is the prices over here: 50 for washing powder, 2 for hand blender and 30 for the hammers. So, our real GDP is $6,150. Now, what we are doing over here, 2018 for assumptions, as assumptions we are taking as a base year, but in actual the Indian government has taken 2011 as a base year. So, that is why to make a simplifying the calculations, we are taking 2018 as a base year to make you better understand the concept of nominal GDP and real GDP. Now, the real GDP 2019, how the calculations will occurs over here. Real GDP 2019 is equal to quantity of 2019 multiplied by price of 2019. You can see on the slide where the variations of prices is coming over here or not. Now, the quantity has already been changed in respect of different years, because in 2018 there was only 90 packs were manufactured of the washing powder with the price of 50 each, but now you can see in the 2019 the quantity has already been changed. Now, the 100 packets is going to be manufactured in the country or in the economy with respect of each packet has a price of 50. Now, in the tabular way, in the table form, we have already representing the price was in 2019 that was 60, but what we are doing to make calculation of the real GDP, now it is the price of 50 only, because we have taken 2018 as a base year to make a calculations. So, in 2018 the price of washing powder packs was 50 rupee each pack. That is why the price is constant from 2018 to 2019. We have multiplied with the constant price in 2019 with the varying quantity. So, 100 multiplied by 50 for the washing powder, 100 multiplied by 2 for the hand blender, 50 multiplied by 30 for the hammers. So, all quantity is going to be multiplied with the constant price of 2018 to make calculation of real GDP 2019. So, our total value of real GDP in 2019 is $6,700. So, we use current quantities at constant price. Now, you can understand with this statement current quantities, but we are calculating on the base year prices. Again, now we are making the calculations for the next year. This is real GDP for 2020. 2020, again we are making the calculations for the quantity with prices. Now, again the prices are constant, because we have taken 2018 as a base year. So, price for the window washing powder, that is 50, price for the baseball for the 2, and price for the hammer is 30. So, price is constant over here, but the quantity for the all of the products is changing now, 100, 120 and 65. Now, the total real GDP is $7,190. Again, you can imagine you can analyze the effect and differences between nominal GDP and real GDP. Always real GDP will be less than the nominal GDP, because real GDP will show you the real picture of the products and services production in the country or the prices of the goods and services in the country. Now, we can make the comparison. The general formula for calculating a growth rate, because when we have already make calculations of nominal GDP and real GDP, this is a time to identify what is the growth rate in GDP. So, this is the basic formula to identify the growth rate in the GDP, that is percentage change is equal to percentage delta, delta is also the representing of change, is equal to new value minus old value divided by old value multiplied by 100. So, what is the new value we have calculated? The new value we have calculated the real GDP 2019 and the old value real GDP 2018 divided by old value, that is real GDP 2018 multiplied by 100, because we want to get the answer in percentage. Now, the percent change is equal to the real GDP 2019, that was 6,700, and the old real GDP, that was 6,150, that was multiplied by old real GDP, this is 6,150 multiplied by 100. So, what is the percentage change occurring? The percentage change in the real GDP is 8.94%. So, that is real GDP grew by 8.94% between 2018 and 2019. So, that was a year respective changes. We are analyzing what is the change from the 1 year to next year. Now, again that was a comparison we can make for the 2019 to 2020. So, in the next slide we have analyzed the change from the 2019 to 2020. So, percentage change in real GDP in 2020, because it is a new value minus the old value is real GDP 2019 divided by the old value real GDP 2019 multiplied by 100. So, what was the value? Now, the percentage change is equal to 7,190 minus 6,700 divided by 6,700 multiplied by 100. So, percentage change in respect of 2019 to 20, that is 7.31%. Now, you can analyze from the change of 2018-19 to 2019-20, there is a less change occurs, or you can say the less growth in the year of 2019-20 in comparison of year 2018-19. Now, we will understand the concept of price level. What is price level? We can make our calculations to make comparison of nominal GDP and real GDP, and how we can make a comparison between both. Basically, we can measure the price level with the GDP deflator. GDP deflator is one of the concept those who are making comparison between both type of GDP. Now, in the next slide, the GDP deflator. One of the example to measure the average price level, that is GDP as deflator with respect of time is equal to nominal GDP with respect of time divided by real GDP with respect of time multiplied by 100. Now, we can understand with the values which we have already calculated. Then real GDP and the living standards. Everybody want to get a high status in the economy, as well as lower income groups want to transmission their self into middle income group, and middle income group want to transmission in the higher income group. That is why real GDP is giving you the actual picture how you are having increment in the per capita income and purchasing power parity in the people, in the country's people. Now, change in nominal GDP can be due to change in prices, or there is a change in quantity of goods and services. Change in real GDP can be due to change in quantities, real GDP in constructed using the constant base year prices. Changes in the real GDP measure changes in the living standards, because whenever there is a rise in per capita income or purchasing power parity, the people will make more expenditure. When they will be able to make more expenditures, of course, the more manufacturing or production is required in the country. When the more production is required in the country, it means more goods and services floating in the economy. So, when the flow of the goods and services will be increased, the people will earn more, because more employment is going to be generated in the economy. So, these all are the related sectors, or you can say this is the impact of 5 sector economic model. Now, we will understand the concept of per capita income, how we will calculate per capita income. A very simplified example I am giving to you all. Your parents are the good earner in the family. For example, you are earning 1 lakh per month salary and they are coming at your home. How many members you have in your family? For example, you are having 4 members in the family. So, you will divide that income by the number of family members in your family. So, 1 lakh divided by 4, as well as the nation is doing making calculations. We are having some lakhs crores of national income divided by the size of populations. Accordingly, we are going to be calculate per capita income. So, average income of the people of a country is particular year is called per capita income. Accordingly, on the basis of per capita income, our whole world has divided in the 3 different economic sectors, that is lower income countries, middle income countries and the highest or richer income countries, whether we can define in a different terms whether it is developing, developed and underdeveloped. When we are saying our country is in a stage of developing, it means more work in process or more work we need to do on the infrastructure or more work we need to do on the industrialization. When we are saying our economy is in a category of developed, so it means we are the richer, we are in the category of richer countries and we have more automations and we have good industrial setup in our country. But when we are saying we are in a category of underdeveloped economy, it means there is a lot of work and lot of credits we need to make and we need to make more employment, we need to generate more employment in the economy. Now, this is the concept of per capita income and another concept is purchasing power parity. So, both are the related terms. When you have good per capita income, of course, you will be more purchasing power in your pocket. So, that is why per capita income for the year 2006-07 may be calculated at the market price prevailing during the financial year 2006-07. This is the one of the example I have taken as a current price and base price. Now, another slide as taken by the Indian government, the base year is 2011. I have made my calculations for the 2017-18, 2018-19 and 2019-20. So, now you can calculate the per capita GNP and per capita NNP. Per capita GNP, this is gross national product. Per capita NNP, this is net national product, which is subtracted by the another sources income outside the country. Per capita GNP in 2017-18, the amount was 21,772. In 2018-19, 23,313. In 2019-20, 25,217. When we are calculating the per capita NNP, 19,297 in 2017-18. In 2018-19, 20,734. In 2019-20, that is 22,483. So, now you can identify how much variations we are occurring from in respective of 3 years 2018, 2019 and 2020. Another concept we are going to understand by the personal disposable income. What do you mean by personal disposable income of a person, of an individual or of a citizen of a country? Personal income is the total income received by the individual of a country from all sources before direct taxes 1 year. When you are calculating the income, it means you didn't deduct any taxes or any comprehensive payments or transfer payments from that. So, there is one of the calculation method by which you will calculate the personal disposable income. The method is this: the personal income we have, the national income minus undistributed corporate profits minus corporate taxes minus social security contributions plus transfer payments plus interest on public debt. So, these all are the related terms which will be helpful to calculate the personal income. Personal disposable income is the income which can be spent on consumption by individuals and families. So, for example, you are earning 1 lakh rupee in a family. So, that is 1 lakh before deduction of the taxes, before any savings which you have done, after making all investments and after making the deduction of taxes, maybe the 25,000 or maybe the 50,000 rupees remains in the pocket to make the expenditures. So, that 50,000 will be your personal disposable income to make the expenditure for your family or for your own belongingness. Next, in the next slide or in the next lecture, we will understand the methods of measuring national income. Basically, first, to understand the methods of measuring national income, we will understand what is GDP at factor cost and GDP at market price. So, I am just going over for the another methods in the next lecture. Thank you.